We've heard it 1,000,003 times. Buy the dip. Just buy the dip. BTFD. Okay, awesome. Right, buy the dip. I get it. But where? Right? How do we know that it's a dip or more like a reversal? Right? Where is this dip? Hey there, John Henry here, SSFTG. Welcome to the video. If this is your first time on the channel, welcome, my friend. I hope to earn your like and subscription today. In this one, we're going to be going over dips. What is a dip? Where do we find a dip? What is classified as a dip? If we're trying to buy one, we should know what it is. One of my absolute favorite ways to find the dip is to look for a value area of interest that we can use, but still give us a reasonable risk allocation. Not something that we have to go blowing way out of the water, but something that we can at least keep our risk a little bit tighter while still finding hot spots, good zones of interest. And that is with measured move pullbacks, repetitive pullbacks, ABCD pullbacks. And I'm not just talking like, oh yeah, we've got to rally up A to B equals C to D. I'm not talking about that. I'm talking about repetitive pullbacks that show up constantly over and over and over again in the market that are of relatively equidistant size. A good example of this actually took place not too long ago in the overnight session, but let's say as an example that we've got this nice curve to the upside, the moving averages start pointing higher, and it goes really bullish until the new day. This is midnight, this vertical dashed line here. So it's been going bullish ever since then. And, well, realistically, if I want to buy the dip, where do I find the dip? Where is the dip? Well, first off, look at what the market's done previously. If we look at this last move down, and let me make this nice and thick so we can see where this is. This is our, okay, I guess it gets the point across. We've got our corrective phase back. If we take this and we look at this pullback, we can see that this pullback has showed up over and over and over again. So the next time the market starts pulling back, where do you think I'm going to start looking for the dip? At the bottom of this arrow. Well, if I can get this to line up with other things, then guess what? I'm going to start paying attention. This is where we start figuring out where is the dip. The dip starts occurring based on where the market has showed you previously where it occurs. The market operates on repetitions constantly. Even if one of these breaks down, which we can see that was actually a beautiful pullback, even when they do break down, that was also the bottom of that, but I was trying to find a breakdown point. Even when they do break down, they still create an air of reliability. Because as an example, if I were a buyer here, I mean, look how much support came in. But if this were to fail and roll through this, chances are, because there was so much volume that was transacted here, the market is naturally going to get drawn back up, kind of gravitationally sucked back to that area, and those earlier bulls, who at that point in time would now be stuck, would be able to get out. Obviously, that's not the case here. This worked out incredibly well. But that's one of my favorite ways to find these areas, because realistically, if the market is going to hold this zone, it's not going to break much through it. I mean, if it is, visually speaking, we could use the L1 pockets like we always talk about from the Day Trading Academy. And if we were looking at this area, we could deviate it a little bit further out and say it shouldn't go more than like an L1 or an L2 distance. An L1 or L2 distance, this is an L1 or an L2 distance based off the L2 as a starting point, as an idea of about how far the market should go. I mean, if it starts deviating outside of that, chances are you're not operating in the same realm. It's not the same pullback. It might not be a pullback. Now, one thing to take note of here is that these types of moves show up all over the place and in a lot of different ways. As an example, like this attempt right here, we can see that the bears very obviously gave it a really good shot. They even had the moving average cross, they had the dive down, they had everything going for them to try to get it going, and they couldn't finish the job. Now, that doesn't mean that this move isn't going to come back to haunt them, but it's going to appear in a little bit of a different way. So we can take this move, we'll draw it up here, and eventually we see kind of a haunting, if you will, of this move, where although the bears failed, they still have an opportunity to show up at a zone of interest. And this creates some really, really nice barriers, unbelievable, really nice barriers of interest for buyers or sellers. You can use these in all different directions, all different sizes, and they show up repetitively, constantly. It's crazy. That's going to do it for this one. Hopefully this guide kind of shows you why I love using these repetitive patterns. They're all over the place, and I would challenge you, go on a chart, Doesn't matter what chart. Honestly, it would be even better if you didn't know the chart or the market that you were looking at. And look how frequently these repetitive moves show up. It is unbelievable. It'll blow your mind. That's why I track these areas as far as where the dip is. Hopefully you find this useful in terms of finding where the dip is. If you have any questions, comments, thoughts, ideas for new videos, or anything else, drop them in the comments below. I always love hearing from you all. Until the next one, thanks for watching, and we'll see you all then. Bye.